Okay. Hey, it's downtown Josh Brown. I'm live from the compound here with Michael Batnick as usual. We have a special guest. Michael Sonnenshein is the managing director of Grayscale, which sponsors the Bitcoin Trust. A lot of people know GBTC as the Bitcoin Trust. So Michael is here to tell us about what's happening, how he's got the largest fund in Bitcoin, why more people should know about it, how it works, everything you've ever wanted to know about making liquid investments into Bitcoin. Stick around. Let's see what's going on. Okay, so first of all, I'm calling it the biggest Bitcoin fund in the world because I think it is, right?
That is true. So today, Grayscale Bitcoin Trust controls about 1.5% of all the Bitcoin outstanding in the world.
So in dollar terms, how much Bitcoin does it control?
We're talking about just shy of about $3 billion.
Okay, and obviously as prices go higher, that goes up. As prices go lower, that goes down.
Correct. So the fund is solely and passively invested in Bitcoin. There is no cash, no leverage, no trading. It's a pure long Bitcoin exposure product. Okay. And so over time, as we create more shares, the fund also has more Bitcoin under it.
Can you explain what you mean by create more shares? So I think a lot of our audience understands ETFs. They may not understand creation redemption,
sure,
but they understand when they put money in, shares are created and given to them in exchange for that money.
Sure.
What is the mechanism for the Grayscale Bitcoin Trust?
So we have an ongoing private placement. So accredited investors, if you're an individual or an institution, can buy shares directly from Grayscale at net asset value. And so if they're putting money into the fund, we're growing the fund by that many shares and that many Bitcoin on a given day. Those shares are then locked up for 6 months.
Let me stop you. So I say, here's $1 million.
We have to create $1 million worth of shares.
You have to buy $1 million worth of Bitcoin.
$1 million worth of Bitcoin, and the fund grows by that much Bitcoin, that many shares.
Okay.
They're locked up for 6 months, and then that investor is then able to sell those shares out onto the public market under the symbol GBTC.
Now, the smaller investor is not coming to you direct to create those shares. They're buying in the secondary market.
Correct.
And they are paying a premium over the price of Bitcoin in order to be able to do that.
Yeah, so the shares have historically and currently do trade at a premium on the secondary market. And I think that's really more than anything a function of how much demand there is for an access product for Bitcoin, right? If you look back at 2019, second only, I think, to Roche, GBTC was the second most liquid and had the second most traded volume of any security on the OTC market last year.
Did it ever trade at a discount as the price is falling?
It actually has not. The premium certainly ebbs and flows, but again, the price of that premium and where GBTC trades every day is completely driven by the market and market forces.
So you don't have a fixed amount of Bitcoins. You have the amount based on what the demand has been from institutions. So if institutions got twice as excited about the asset class, you could theoretically be out there buying even more Bitcoins in order to facilitate them owning it.
100%. Last year, 2019, about 71% of the inflows across the whole product family, because we have 10 funds at Grayscale, 71% of that was institutional.
Okay.
So there is tremendous demand.
Are these family offices? Are these hedge funds? What are we talking about when we say institutional?
It's everything. So it's financial advisors and RIAs, it's family offices, it's hedge funds that really, Josh, it's every strategy you can imagine: global macro funds, risk arb funds, momentum funds, tech funds, and then certainly starting to see a little bit more interest from the endowment and kind of pension community.
So I kind of understand why people would be buying it through your trust if they were institutions, because an institution is not investing their own money. By definition, they're an intermediary. They have an end client. Mm-hmm. Sometimes it's a wealthy family. Sometimes it's an endowment. It's a foundation. They have to answer to that entity for what happens with the money. So what are their alternatives to Grayscale Bitcoin Trusts? They can be in the futures market, buying options on Bitcoin, buying futures. That's got all its own different characteristics. They could have their own wallet and be buying digital coins directly from a brokerage firm. Mm-hmm. We know that's fraught with peril. So I think like a lot of them look at your product, they see the liquidity. You now have how many years of a...
So over 6 years of a track record.
So they say, all right, these people have been around for 6 years. They haven't been hacked. They haven't been,
No.
Right. And they just say, if we have to have 1% in Bitcoin, which is what we say is our mandate, they would probably say like, this looks like it's the safest way to do it? Like, is that the thought process that you think goes on?
I think the thought process is actually around things like the fact that the fund has a QSIP. It's audited. It produces financial statements. It produces tax statements.
You can own it in a brokerage account.
In a brokerage account. You can own it in a tax-advantaged account. Right. And actually, just earlier this year, Grayscale Bitcoin Trust became an SEC reporting company. So now you're talking about the fund, which has been around for over 6 years, has the exact same reporting and disclosure obligations as any other public company or any other product that trades in the market.
The fund itself is now a
SEC reporting company.
As a reporting company.
Yeah, this is the first digital currency instrument to become SEC reporting. So investors can expect to start seeing 10Ks and 10Qs and give them all the same protections that come with being SEC reporting.
I guess one potential, or before I say that, Bitcoin never sleeps.
It
trades
doesn't.
24 hours a day. What about GBTC?
GBTC trades 9:30 to 4. It trades on the OTC market.
Right, because it's in brokerage accounts.
So, but I'm saying, like, if you want access to Bitcoin all the time, this is probably not the right instrument.
Well, so I think that our investors that are trading GBTC are certainly looking for it and looking at it as an access product. The investors that are buying into the private placement are, going into it knowing there's a 6-month lockup on the shares they're creating.
So they're not traders.
Right.
These are people that directionally want to have the Bitcoin exposure and are comfortable and believe in the long-term potential of where Bitcoin's going.
Now, you told me some crazy shit that I love.
Okay.
This is maybe like the best thing I've ever heard, and I don't understand why more people don't know about this. You told me in Florida the other day that people that own their own Bitcoin, sitting on Coinbase or Gemini or like sitting at any other brokerage or even in cold storage, they can come to you and give you their Bitcoin, and you will turn around and give them shares of GBTC in exchange, and they get the premium that the shares trade. Is that true?
So let me unpack that for you. So we take subscriptions.
Yeah, I was definitely drinking when we had this conversation.
So I would let me unpack that.
Do you understand what I'm trying to say?
So we take subscriptions into the private placement, both in cash as well as in Bitcoin, right? So you can give us cash. We'll go out, buy the underlying Bitcoin, create the requisite amount of shares. But you can also give us Bitcoin that will have to go through all of our AML and KYC and make sure that we're taking in clean coins into the fund. And you will then be long shares.
Is clean coins like clean coal?
No, we're talking about, like, as opposed to cash, there are firms now that actually do blockchain surveillance and monitoring.
So they could tell where they originated from?
They can tell every transaction, every wallet, everything the coins have ever been a part of.
So you're not washing coins from Deutsche Bank?
We are not washing anything. Not a thing.
Okay.
And so investors can take coins they already own, contribute them into the fund in exchange for shares of the private placement if you're an accredited investor, wait the 6-month lockup, and then you'll be able to then sell your shares out on the public market at whatever the prevailing price is for GBTC.
Okay, so assuming, let's say Bitcoin does not change in value, but you now don't have Bitcoin, you have shares of GBTC, which has historically traded at a premium.
Are we talking 2%, 5%? What are we talking?
So the premium now is probably somewhere around 25 to 30% above the net asset value of the fund.
Because I was going to say for a little premium, it probably doesn't make sense to give up the liquidity for 6 months.
No, 25% premium. Like there must be hedge funds that are set up just to do this.
I don't necessarily think there are hedge funds just for this, but certainly for some
investors,
for some investors, there are certainly
the risk is the price.
Totally, but for some investors,
have.
for some subset of the coins they own, that is a potentially attractive trade for them. So they are doing
What will narrow that premium? The launch of an ETF or the conversion of you to an ETF? Like it's inconceivable to me that this becomes a $1 trillion asset class, and there's still one
without an
vehicle
ETF
with an enormous premium embedded in it.
So, the ETF is a matter of when, not a matter of if, right? And so if you look back at our history, we registered for a Bitcoin ETF in 2017 to uplist GBTC into a bona fide ETF on the New York Stock Exchange. We made a ton of progress with the SEC, but ultimately realized they weren't ready and were really citing some concerns with the underlying market. And so we pulled out of that process. So I think the regulatory community is as engaged as they've ever been. Certainly certainly looking back at what I just shared with you guys, that our fund just became an SEC reporting company, this should signal to everybody who's looking at the space and looking for regulatory clarity that regulators are willing to engage and are moving the needle forward on certain items.
I think the regulators have done an unbelievably good job with the emergence of this, because we saw that moment in 2017 with the ICOs, and it was obviously a Wild West. But like the prosecutions got underway really quickly. That I could imagine something like that have gone on for 5 years in a prior era.
Sure. I mean,
Like the .com thing, there were scams everywhere, and that went on for 5 years.
Totally agree with you. We stayed meaningfully away from the ICO space, never
Right.
did anything with it. Running a regulated business, it could not have been clearer to us what laws are in place of how to raise money from the American public, how to offer securities to the American public, and a lot of these projects were not complying with very, very well-established guidelines.
What are the conversations like today versus 2 years ago? Like around Bitcoin?
Like institutions when they come to
So
you.
Bitcoin itself has solidified its role as a store of value or as a digital gold, right? So when I talk to an institution, they now look at Bitcoin as part of the same flight to safety as they might look at bonds or gold or other things that have served in that capacity for them. And that wasn't a widely held narrative probably until about the last 12, 18 months.
They see it as like a viable alternative to stocks and bonds.
Well, I think if you look at the world that we live in, it's a digital world, right? And so gold may have made sense for a physical world, but we've really, made the move into a digital era. So we need a digital store of value, and this is what's resonating with them because, Bitcoin has a lot of the same attributes as gold and actually has some things about it that make it better than gold. It's verifiably scarce. It's much more portable, right? It's much more divisible. Oh, you want to open up this can of worms?
Is it verifiably scarce because the forks seems like, oh, I'm just going to make another 20 million Bitcoin. They'll just be slightly different. Like, is it really verifiably scarce?
The Bitcoin protocol itself will only ever have 21 million Bitcoins
and
ever
4 million of them are already lost forever. And
we don't know how many are lost, right? And forks and airdrops have actually become, I think, less of a part of the conversation in the community. But they will
Bitcoin
continue
Cash
to be
is
there.
still a thing.
It is, but it's also looking to become and kind of solve other challenges that Bitcoin has. And over time, we don't know who will be the winner.
All right, here's another question. This shit started 10 years ago. No one is walking into Starbucks and buying a coffee on the blockchain. A, there's no reason to. It's $3. Your credit card's in Apple Pay. Who cares? But B, even if they wanted to, it's so cumbersome that like people behind them on the line would be like, "Wait, what are you doing?"
Sure.
I'm trying to get to work.
So there's a couple of reports
Like,
now.
in other words, why
What's the
why
use
is it
case?
like? Why is it like this?
Well, so I think that there's this narrative that people are really stuck on that somehow adoption equates to being able to use Bitcoin to buy something.
Well, what does adoption mean then?
I think adoption means how much capital is flowing into the space, what the technological innovations are around cryptography and the use of blockchain technology, human capital, job creation. I mean, this is a flourishing industry. And, I think investors need to be looking at this in the context of building out a portfolio. Adoption does not mean you can buy a cup of coffee with it, right? Because as you said, the financial system we have today, it works, right? You have credit cards, you have access to lending.
Yeah, right.
credit.
I'm just saying, like, it works. It's good enough for everyone. Right. Nobody's complaining about the hassle of swiping a phone in front of a scanner.
Sure, but I think if you look at even where Bitcoin's starting to take share of other markets, whether it's gold or that store of value market, or even starting to look at Bitcoin as a value transfer mechanism, moving money around the world, cross-border payments, et cetera, we're in the early innings of this. So the impatience of what adoption is and what adoption looks like, I think people really need to recalibrate that.
When you think about traditional Wall Street institutions, who are the ones? So I know, like, Fidelity was very fashion forward with this stuff.
Yep.
I know Rick Edelman is really excited about blockchain. Who are the other financial institutions that you feel are like taking the lead and are going to really make Bitcoin like a regular part of investors' asset allocation or their world?
So first and foremost,
Besides you, of course.
you cannot name investment firm, insurance company, credit card firm, et cetera, that does not already have meaningful work going on in the broadly
Yes, I
defined
can.
digital currency
Berkshire
space.
Hathaway does not have any blockchain projects underway.
Okay, fair. I'll give you the
Okay.
Berkshire Hathaway
Besides
one.
them,
That's fine.
maybe you're right.
So you mentioned Fidelity. That's super spot on, right?
Sure.
They have a whole unit devoted to this and have started Bitcoin custody and started trading for some clients. You got to look at some firms like CME Group, who's launched futures.
Sure.
ICE, the parent company in New York Stock Exchange, has launched Bakkt. They have their own futures product and are working on some commercial applications. You got to look at Robinhood. You got to look at Square. You got to look at companies like TD Ameritrade, who have a whole digital assets space.
Soon to be Schwab. Will Schwab be interested in TD's legacy Bitcoin stuff?
Time will tell. Time
Okay.
will tell. But there is ever-growing evidence that this asset class is not going away. Investors want access to it. And if the legacy institutions want to remain competitive, they're going to have to open the door to this asset class for their clients.
I want to talk, lastly, this thing that you told me about, the Schwab Survey.
Yeah.
So I'm 42 years old. Michael is in his 30s. What are you, like 22?
Stop.
Okay. But and then like I think about the traditional wealth management client is like 65, let's say. I'm just making up a number. But as you go down that scale, there's more and more interest in digital assets as an investment. And so what did you tell me about that survey? Because I thought that was remarkable.
Okay, so Charles Schwab, about 2 months ago, late 2019, put out a survey that looked at what were the top 10 equity holdings of 3 different segments of their clients, right? They looked at baby boomers,
Right.
Gen Xers, and then they looked at millennials. And you saw the usual suspects of widely held securities, right? You saw Apple, you saw Netflix, you saw
Across
Google.
all 3.
Across all 3.
Right.
But where you saw really an outlier and really strong evidence of kind of where the puck is going and where people need to be skating to is on the millennial column. The 5th most held security by millennials at Schwab, according to the survey, was the Grayscale Bitcoin Trust,
that shit? Are you
GBTC.
surprised by that? That's not Robinhood.
Yeah,
That's Schwab.
So you have to think about what you as an advisor or what advisors generally are doing about this generational wealth
Yeah,
transfer.
right. So you're right. You can't
Right?
you can't be like, no, I don't talk about it. It's nonsense.
Absolutely
that
not.
Answer doesn't work.
And if you're going to continue to advise on those assets as they move down to your clients' children, you need to be thinking about what assets resonate with them, what do they want to invest in, and I don't foresee it being things like gold. I would much sooner believe that it's going to be things like Bitcoin and digital currencies, because this is the era that those investors grew up in. And it's becoming a meaningful part of the financial system.
Michael, thank you so much for coming by to explain this stuff to us. How do you want people to follow like your ongoing messaging or thoughts on the industry? Like Twitter or
Yeah, Twitter. So
Okay.
Twitter is
what's your handle?
my handle is at Sonnenshein, at my last name, and you can certainly
We're
follow.
gonna link to that below. How do people get more information about Grayscale, including disclaimers, risk disclosures? How do we find that?
So come to our website, grayscale.co.
Okay.
Follow us on Twitter at Grayscale Invest, and you can sign up to get our news and announcements and join. See a lot of our content and follow along.
Okay, so if Bitcoin either crashes or doubles, you'll come back.
I'm back anytime you want.
Okay, we love the action. We watch it. We think it's great. Thank you so much, guys. Follow Michael. Check out Grayscale if you're curious about how their products work, and let us know what you think. What are your thoughts? Bitcoin, will it ever be an asset class in the eyes of financial advisors? Go ahead and give us a like if you like what we're talking about. Please feel free to subscribe if you're not already, and we'll talk to you soon.